Joining us this afternoon, we have Kunal Sarogi of Equity Rush, who joins in to answer all the stock questions. And Hemant Rustagi of Wise Invest Advisors is our personal finance expert for the day. Good afternoon, gentlemen. Thanks very much for speaking with us. First up, we have a caller who wants to talk about JP Associates. Sangeeta Matre calls in from Mumbai. Hi, Sangeeta.
Hi, hello.
Hi, what's your question?
Actually, I have 370 shares of JP Associate at 78 rupees. I have brought them in July.
No.
So, shall I hold it or bear the loss?
Okay, and normally, are you a long-term investor or are you a trader?
A short-term investor.
Oh dear. Kunal, she is a short-term investor. She's making quite a significant loss in JP Associates. Is there any sort of turnaround that you see on the charts, or should she just book her losses?
Well, I think, Sumera, it's a bad investment to actually hold on to JP Associate given its trajectory, given the fact that it's underperforming, and there are a multitude of fundamental factors for that. But if you look at the chart structure, I think it's got a very dismal looking chart, and although it's pulled up very nicely in today's trade, but I think you should use whatever opportunity you get to try and exit out of this one. I don't expect for the stock to get past 26.50, 27 levels, and if you see those levels, my advice would be to exit out to JP, move on to something qualitative. Bit.
All right, then that's if you're coming in on JP Associates. Not the best stock to be into, and in fact, any opportunity you get, just exit out of it. Take it as a bad experience. But let's pull up Glenmark. I think that stock, in fact, has come in for some intense selling pressure in the last few minutes. It's down close to around 2%, and that's happened just in the last few minutes. That's the stock up for you. I think they have good amount of exposure to Russia. Ekta was telling us about that yesterday itself. But let's get back to answering your stock queries. Meera Shekhar calls us from Bangalore, and she has some investments in Reliance Industries. Hi, Meera.
Hi, I'm Meera here. I want to ask about Reliance Industries.
All right, Meera, when did you buy these shares? I believe you've got 82?
I bought 2010.
Okay.
I bought, I have 82 shares at a cost of 1,100.
That's true.
And I want to know whether it's a good time to exit or will there be a bounce back in the stock?
All right, Meera, it's definitely not a good time to exit because you're down close to around 19,000 bucks approximately, but you've been holding it for the last few years. Are you okay with holding it for the next couple of years?
I'm a long-term investor.
Long-term investor, so you can wait a tad bit longer, a couple of years.
Yes. Yes.
All right, Meera, let's try to help you out on this one. It's not giving you big money, but Kunal's our expert in-house. Kunal, what do you think? She's making a bit of a loss. The stock hasn't moved much in the last few years. Is the best to come?
Well, I think, Nigel, you should, I mean, the investor should definitely hold on to Reliance, although, of course, the stock has disappointed investors, especially longer-term investors who had invested since 2009 have not really made any money. In fact, they've lost a lot of money holding on to Reliance. But I think if you hold it for some more time, I think Reliance might actually make up for all this lost time. So you just have to stay in there and hold on to it for some more time. And I think that the stock might actually get back to your price. In case you can come up with some additional capital, I think this could be a very good time to actually average your position so that you have a better acquisition price on Reliance. So hold on to your investment, and if you can, buy more.
All right, Meera, that's the advice for you. In fact, the stock, if we see at 870 odd levels, is very close to their buyback price in 2012 of 870. And just this morning, UBS has called it one of their top picks with a target price of 1,400 rupees. So perhaps Kunal's view is also in line, that remain invested. Of course, there's the standard disclosure that Reliance Industries has acquired management control of Network 18 and TV18, which is the companies that own and operate the channel that you're watching. Let's get our next caller in as well. We have an SMS query that has been sent to us. Nisha Sina writes to us from Chennai. She's a housewife. She says she and her husband want to invest a lump sum in banking as well as a PSU debt fund, and wants to know if it is a good option. She also wants to know if she can narrow down on banking and PSU debt fund from Kotak, and her time horizon is long term. Hemant?
Well, I would like to tell Nisha, since she's specifically mentioned about Kotak Banking and PSU Debt Fund, that it's definitely a good fund, but I think it's important to understand that it's not a fund where you can invest for the long term. It's a fund where you can park your money for short term. You know, it's important to understand that the major differentiation between different kind of debt fund is the maturity duration of the fund's portfolio. Any fund that has a longer duration of maturity is likely to give you higher return, but is also likely to be more volatile. The funds that have a shorter maturity duration are likely to give you stable return. If you look at this Kotak Banking and PSU fund, its average maturity is around 2 to 3 months, so which makes it an ideal option for parking money. So if the intent is to park money for some time, well, actually she can go ahead and invest in this. But since she's talking about long term, as I mentioned earlier, then she has to look at a fund which has a longer duration, but must realize that there can be attendant risk of volatility, since there is an inverse relationship between interest rate and the bond prices. As the rates are heading downward, a fund like Kotak Bond can be an ideal option, provided she is willing to take some risk of volatility. But if she can move out of debt funds, then Kotak has another fund called Kotak Equity Saving Fund, which has a combination of equity, which is around 20%, then arbitrage, which is around 40 to 45%, and the rest goes into debt. This is more tax efficient. After 1 year, any gain that she makes will be tax-free. So she can look at a combination of a bond fund and equity saving fund.
Let's go to our next caller. Vishal Kumar calls us, and he has a personal finance query. Hi, Vishal.
Hello.
Hi, Vishal.
Hello. My name is Vishal Kumar.
Yes, Vishal.
I wanted to ask, I want to invest in savings and investment plan.
Okay.
And good tax saving plan. Is it good option for long-term investment?
All right, Vishal, what is the amount you're looking to invest? Monthly basis, periodically? Is it on a yearly basis?
Monthly basis.
Monthly basis. And could you give us a quantum? 10,000, 20,000? What is it?
Yeah.
Around 10 to 20,000.
10 to 20,000.
Superb. All right, Hemant, let's come across to you. What should he do?
Well, I think fortunately there are a number of options available for Vishal to invest his money. But since it appears that he's, wants to start his investment process, my recommendation would be that he should, follow a goal-based investment approach, wherein he should try and define his goal. All of us have different goals, short-term, medium, and long-term. Then assign a time horizon to each of the goal and fix a target. Now, what this process does is it actually decides, it helps you in deciding what kind of asset allocation you should do. So primarily what happens is that when you're investing for the long term, you invest in an asset class like equity. When you invest for the short term, you should invest in debt, because the focus has to be on safety of capital. So my recommendation is follow a goal-based approach rather than randomly investing money. Since he's mentioned about investing for the long term, at least this money, my recommendation would be that he can look at well-diversified equity fund, and ideally for a small investor, it should be long-term as well as systematic investment. So if he can start also investing some money through SIP, that will be really good. He can look at a couple of funds like SDFC Equity and Birla Sun Life Frontline Equity. In the tax-saving mutual funds, again, can be a good option. They offer equity-linked savings scheme. Now, these funds typically have a lock-in period of 3 years, but the gain that come by way of dividend or capital gain is all tax-free. So in this category, my recommendation would be Axis Long-Term Equity and Reliance Tax Saver.
All right, up next, our next caller who calls in is Vimal Surana, who's on the line with us from Raipur. Hi Vimal, what's your question?
हाँ जी, मेरे पास TCS है 50 shares और 267780.80 लॉन्ग टर्म के लिए रखना उचित है कि निकाल दिया जाए अभी?
और आपने कब खरीदा था ये शेयर्स?
ये तीन महीने पहले.
और नॉर्मली आप लॉन्ग टर्म इन्वेस्टर हैं, आपको फिलहाल अपने फंड्स की जरूरत है या आप अगर
नहीं लॉन्ग टर्म है हम.
Okay. Kunal, he has a longer term time frame. He's not in need of funds at the moment. It is a good quality stock with great fundamentals. Should he just ride this wave for the moment and remain invested in the hopes of better returns?
Well, if you look at the chart structure for TCS, Mera, I think there's a very ominous looking head and shoulders forming on its daily charts. Now, if the pattern works out, I think the stock could go and correct quite a bit from the current level. So my target on TCS is close to about 2200. So my suggestion to the investor would be to try and exit out of the stock at the current levels and look to re-enter the stock closer to about 2200, 2150 in case it gets there. So for now, my advice would be to exit out of TCS.
All right, then time to exit out of TCS. Remember that one had a horrid run in Monday's trading session, but it's recovered most of those losses. But Kunal tells you that in fact it's not looking good technically. But our next caller is already in, so Ashish calls us, I think, from New Delhi. He has some investments in SBI. Hi, Ashish.
Hello, sir.
Hi, how can we help you?
सर मैंने ये SBI बाय किया था 321 पे.
Okay.
अभी ये 200 समथिंग का चल रहा है, तो मुझे इसको होल्ड करना चाहिए कि इसे सेल निकाल देना चाहिए?
जी आशीष जी, आप लॉन्ग टर्म इन्वेस्टर हैं?
हाँ सर, लॉन्ग टर्म
investor. All right, Kunal, here's someone who's actually caught the top. He caught it at around 321. I think the stock went down all the way to around 290 just in the last couple of trading sessions. What should he do, Kunal?
Well, I think he should stay put, Nigel. If you look at the chart now, I think State Bank has led the recovery in the markets today. So I think State Bank definitely has got a lot of buying interest coming its way. The chart is quite good, and it's got a solid support close to about 280, 285. So there's no rationale for you to exit. I think you should hold on, although you got it at the wrong price. But if you hold it, I'm sure the markets will bail you out, and you should hold on.
So we have a query that has been sent to us by Rahul Pandey, who writes to us from Patna. He says he wants to know which are the instruments which will give him the best returns in a scenario where interest rates are likely to be cut. Hemant, what's your take on that? Would it be debt funds, or are there any other better options?
Well, actually, if you really see, when interest rate fall, it's a good news for both equity as well as debt market. It's good for the equity market because lower interest rate kickstarts the economic growth and also improves the profitability of the company. But of course, it's important to follow the right strategy of investing in equity and have a long-term view and follow a disciplined approach. On the debt side, since there is an inverse relationship between interest rate and bond prices, anyone who's holding long-term bond or a debt fund, wherein the portfolio consists of longer maturity duration, one benefits from that. But like I said, you have to be in the right product. You have to be in either a debt fund or holding a long-term, bond fund in your portfolio. If you're actually invested in a fund which is having a maturity duration of 2 to 3 months, you'll actually not benefit from that. In fact, your returns will go down. So choose the right fund and choose the right option to benefit from the falling interest rate.
All right, Rahul, hope you listened into that advice. Choose the right fund and, in fact, pick the right option. That will give you the biggest returns. But our final query, I think, today is coming from Sandeep. He calls us, and I think he has some investments in JSPL. Hi, Sandeep.
नमस्कार सर.
नमस्कार, आपका सवाल क्या है?
सर मेरे पास 400 शेयर्स हैं JSPL के at the rate 150 सर. 2 महीने पहले लिए हैं सर ये. सर मैं 2 साल के लिए रुक सकता हूँ सर.
Great. All right, Kunal, here's an investor. He's got 400 shares and he's not got it at that 200, 250 plus level. He's got it at 150, so he's $20 down from his buy price. But he doesn't mind holding it for the next 2 years. Will it look better? What's your view?
Well, at the moment, Nigel, there's nothing on the chart to suggest that the stock is bottoming out at the current levels. But I would suggest that since the investors only bought recently, the first thing that he should do is put a stop loss. And I think a stop loss for the stock, and given its volatility, should be placed at about 120 to 123. With that as your stop loss, hold on. The stock might give you a pullback. In case metals recover globally and in India, you might see the stock going back to 155, 160 levels. And that, I think, is a good place to exit out of this one. So 160 could be a near-term target, but remember to put a stop loss at 122.
All right, Kunal, any disclosures?
Well, the stocks that we spoke about to Ms. Sumera, in none of the stocks I have a personal position.
All right, Kunal and Hemant, thanks very much to both of you for joining in today and for advising our viewers.